Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Tuesday, March 17, 2009. We begin in Japan, where a measure of the Japanese services sector rose 0.4% in January, surprising forecasts which had called for a decline of 0.5%. That increase followed 2 months of rather sharp declines. The Aussie-yen pair has recently climbed above strong resistance at the 64.60 level, and today's session saw the pair consolidating in an 80-pip range. Stocks in Tokyo were higher, which boosted risk appetite for the higher-yielding Aussie during the Asian session. In Europe, the German ZEW economic sentiment improved to negative 3.5, surprising forecasts which had the index falling further. Though the current conditions index fell lower, expectations for the economy in 6 months improved. The report, which measures opinions of financial market experts, said that the economic slowdown is gradually phasing out, with the bottom of the recession likely to be reached this summer. In the UK, housing prices in January, as measured by a government agency, was down 11.5% on the year. That is worse than in December. Falling housing prices will continue to pressure the UK economy, as it leaves sellers with less money and weakens confidence of consumers as they see their main investment losing its value. The Rightmove House Price Index showed a smaller 9% decline for the year through February in yesterday's release. The Euro-Pound pair rose today, extending its gains from the middle of yesterday's session. The pair had hit a low of 0.9150, but is now back near the 0.9260 level. The gains we have seen in UK stocks stalled and reversed, as did most equities across Europe. That increase in risk aversion hurt the pound and boosted the euro in this pair during European trading. The pound-dollar pair fell to the 1.3965 level following the release of positive U.S. housing data, which we'll get to shortly. The pair touched an intraday high at 1.4137, but faltered in European trading and then extended its losses in New York trading. However, by the early afternoon, the pair was consolidating around 1.40. The UK will be releasing employment data tomorrow, which may also have had a hand in weakening the pound in today's session, as the report is expected to show an increase in lost jobs. The euro, meanwhile, fell against the Swiss franc after touching a high of 1.5443 in early European trading. That tested yesterday's resistance, and the euro-franc pair proceeded to fall about 120 pips to a low of 1.5215. Again, weaker stocks were the main culprit here. The euro found some support in morning New York trading, at which point it began a counter-rally. Housing starts in the U.S. surged in February, rising 22% compared to January, the biggest monthly increase since 1990. There are 583,000 new homes being built at an annual rate, when projections had the figure falling further to show an annual pace of 450,000 units. The much better than expected number came on a rebound in constructions of condominiums and apartments, and may signal that builders cut too deeply as a result of the credit crunch. A turnaround in housing starts and the overall housing market would be a huge boost to the troubled U.S. economy. Some expect a turnaround in the second half of this year, provided that the government and the Fed find a way to shore up the financial markets. Building permits, meanwhile, rose 3% in February to an annualized pace of 547,000. In the second piece of news from the U.S., producer prices rose by 0.1% in February, smaller than expectations of a 0.4% increase, and a substantial drop from the 0.8% seen in January. Looking at the core numbers, though, producer inflation rose more than expected. The monthly core rate was up 0.2%. Energy prices have stabilized, which has helped to stop a deflationary spiral in producer prices. The euro-dollar pair fell in favor of the greenback in European and early New York trading after brief strength for the euro on the back of its better-than-expected ZEW report. However, weaker European stocks and the surprise in U.S. housing starts helped the greenback reach the 1.2930 level. As we saw in the euro-franc pair, the euro did manage to find support afterwards and initiated a counter-rally in later New York trading as U.S. stocks rallied, increasing risk appetite. In Canada, manufacturing sales fell by 5.4% in January, adding to an 8.2% decline in December. That puts the total dollar amount of sales to its lowest level in 10 years. The decline was led by a record 27.3% contraction in the transportation equipment industry. The Canadian dollar-US dollar pair hit an intraday high near 1.2765 following the weak Canadian manufacturing release, which also coincided with the last of the risk aversion we saw from overnight. But with US stocks rising, the loonie fed on the risk appetite to pare its losses in New York trading. Tonight, Australia will post its leading index, and the Bank of Japan will conclude its interest rate meeting. Overnight, Switzerland will release its retail sales, and the UK will post its claimant count and unemployment rate along with the Bank of England meeting minutes. Tomorrow morning, the US will release data on consumer prices and its current account, while Canada will release its wholesale sales. In the afternoon, the Fed concludes its interest rate meeting, and traders will look for clues from the statement about how the Fed is assessing its new initiatives. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com. And from all of us, have a fun and safe St. Patrick's Day.